Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Since today is a holiday, it's a Good Friday, and hardly we will get any significant action today. That's why I thought that maybe we could take a look at the euro currency again, because here we've got some new patterns have been formed that could become really important for short-term perspective on the euro currency. Also, guys, I would like to wish you the Happy Easter. Spend this time with your relatives, with those who you love. This is very good and very light holiday. So Orthodox Easter will happen only on the 1st of the May, so it will be not very soon. But Catholics church, so this will be on this Sunday. So this is very important holiday. So on the euro currency, guys, yesterday we have said that on the daily charts that although market shows really stable downward action, very stubborn action was, still we said that we have to watch for this area, because this is in fact the last edge for short-term bullish setup. And if market will break it, the next destination point will be around 110 area, where market could stop again and turn to the upside. If this will not happen around 110, then probably this will be the halfway to the bearish downward continuation. And if market will break through the 110, this could mean the total breakout to the downside. So it could become the reversal of the medium-term perspective on the euro currency. But right now, market still stands around 111.30 area. On the daily chart, this area is also the yearly pivot point. And as market has come right to this area yesterday, we have decided, if you remember our discussion, we said that take a look, the market stands very close to the MACD predictor. We probably should monitor for appearing of the grabber in this area. And take a look, this really has happened. So market has formed a bullish grabber, and this grabber suggests the taking out of this stop, this minimum target of this pattern. This in turn, if market will start move up here, this in turn probably will lead to the taking out of this stop as well. So this will be very close, and we have another grabber here. So here, it's a large grabber that's still valid. At the same time, guys, right now market stands the range of this grabber is very small, and right now market stands very close to its low, because this in fact an invalidation of this grabber. So if market, for example, will break through it and will move below this low, it will mean that this grabber has failed, or it's better to say has been erased by the price action. It's not quite failed. That's why here we see another reason for monitoring this area, its importance of this area, because right now this is not just the fib level, this is not just a yearly pivot point and some objective points that have been completed recently, but this is also the bottom, the low of the bullish grabber. And that's particularly important right now, because particularly this pattern could lead market to the upside. Okay, and that's why this nice pattern that has been formed, and we definitely should watch over it. So on the 4-hour time frame chart, guys, I did not see really big shifts. So you can see that market has reached this area where approximately was in the same price level yesterday when we have started the discussion of the situation. Here you clearly could see the confluence support that market has hit. This is 111.40, 111.65 confluence support on the 4-hour time frame chart. This low is an invalidation point of the grabber. So if market will drop below it, it simultaneously will move below the confluence, and probably that will be the sign that market on the road right to the 110.20 area. It's the next support that we will be watching for. But moving to this support, guys, will be really not very good, because in this case market will form reversal swing. You can see the swing down will be greater than this one, and so will be not a really good sign for the bulls. Also, guys, if market will break for this area, I have shown this yesterday, market could double the harmonic swing. So as you can see here and here, market has passive price tag for approximately the same distance. So currently more or less market is keeping the harmonic swing. But usually when the market breaks the bottom of the harmonic swing, it usually has the tendency to double it. This also confirms our expectation of the moving to the 110.20 area. But right now our major attention should be on this grabber, and particularly speaking on this low. On the hourly chart, guys, personally I do not see really something interesting. Yes, we could recognize here some kind of the hand shoulders pattern, minor hand shoulders pattern is forming, right? So this could be the left shoulder, this could be the head, right, the bottom of the grabber. Right now market maybe is forming another shoulder right here. It's very small pattern. It's probably even better to look at it on even lower time frame chart, say on a 15-minute chart, for example. Let's check. Right, take a look. This here is it seems a bit better than on the hourly chart. But I think that this channel is more significant for us than this head and shoulders pattern, because breaking through the channel, it means that it's very important in every moment when you see it on any market. The breaking out of the channel is a very important sign, and this really could become the sign that market starting to move according with the pattern, according with this grabber, keeping this support and keeping this harmonic swing, and maybe market has started move right to the top. That's why I think that's better to watch for not just this head and shoulders potential pattern, but for breakout out of this channel as the sign that probably upward action has started. So does it make sense to trade this setup, guys? Well, it's a bit a tricky question, because what the problem? The problem is that if market even will drop to the 1020 area, this will not cancel the overall setup here, because the validation point of this grabber stands right now at 108. But you will definitely not trade this possible upside potential with the stops below 108, right? Right. So besides, if market even drop to the 1020 area, this also keeps chances on appearing of the butterfly that we have discussed yesterday. Recall our talks on this subject. So this could become the left wing. If even market will show the 618 retracement, that will keep the chance of the appearing of the butterfly and keep the chance of possible upward reaction. That's why conclusion, we could make only one conclusion. So you could trade probably this setup, but in this case you need to limit your loss by the placing stop somewhere below the lows of the grabber, because in this case you will get the relatively acceptable risk, and reward also will be very significant. So only from that standpoint, from this point of view, this probably makes some sense. But at the same time, if even, guys, this short-term small setup will be cancelled and destroyed, the market will drop below these lows, it will not mean that overall bullish setup already has been cancelled by the reasons that we have discussed here. That's been said, if you are watching for taking the long position, you probably could stick with this grabber with the placing stop below these lows and just wait and watch what really will happen. If this setup will not work and market will erase the grabber, we will turn to the monitoring of the possible butterfly here around 110.20 area. That will be the next level that we will be watching for.